Today, we're diving deep into one of the most powerful and, honestly, one of the most misunderstood forces in the entire crypto market, narratives. We're going to break down why it's the compelling stories, not just the raw tech, that really truly move the needle.
Let this sink in for a second. This one idea is pretty much the key to unlocking how this market actually works. It's not just about looking at charts, buying low, selling high. It's about understanding the why. Why is the price moving? And that why? Well, it's almost always a story.
And look, this right here, this captures a feeling I bet so many of us have felt. You find this project, right? The tech is groundbreaking, the roadmap is perfect, and the price just flatlines. It goes nowhere. Meanwhile, some meme coin with a funny picture of a dog in a hat just absolutely explodes. The reason is simple, really. The dog with the hat had a better story. It went viral. Capital doesn't always go to the best technology. It flows to the most compelling narrative.
Okay, so here's our game plan for today. First, we're going to define what a narrative even is. Then, we'll map out its life cycle, from birth to death. After that, we'll get into the good stuff, how you can actually spot them early. We'll look at the stories dominating the market right now, and then we'll wrap it all up by building a strategic plan so you can trade them.
So first things first, what exactly is a crypto narrative? Because, it's so much more than just a buzzword.
Think of it like this. A narrative is the shared belief, the story that gives a token its meaning. It's the thing that answers those two critical questions. Why does this thing have any value? And maybe even more importantly, why should I care about it right now? It creates that urgency, that vision of the future that gets people excited.
To make this really concrete, let's throw it back to a classic example, DeFi summer back in 2020. Now, the technology for decentralized finance, it existed before then, but it was super niche. The story that just caught fire was simple and powerful. Be your own bank. Suddenly, it wasn't about the complex tech anymore. It was about profit, about taking control, about a whole financial revolution.
So before this Be Your Own Bank story really took hold, the entire DeFi ecosystem had about $700 million locked in it. I mean, in the grand scheme of things, that's basically a rounding error. It was just a cool experiment for a handful of crypto nerds.
But then, once that story clicked, look what happened. In just a few months, the total value locked, the TVL, skyrocketed to over $15 billion. That's a 2,100% increase. The tech didn't fundamentally change that fast. The story did. And the money always, always follows the story.
So the big takeaway here is that these stories, they're not random. They actually follow a pretty predictable pattern. Let's break down that pattern right now. We'll call it the narrative life cycle. See, every narrative moves through 4 clear stages. It all starts quietly, in stage 1, Inception. This is where only the builders and deep dive researchers are even paying attention. Then comes stage 2, excitement. This is when you see the venture capitalists, the smart money, start to deploy some serious capital. Next up is social proof. Influencers are talking about it, FOMO is kicking in everywhere. And that final stage, liquidity, that's peak euphoria. It's on the mainstream news, your friends are asking you how to buy in. And, well, that's usually the top. But, and this is absolutely critical for today's market, these cycles are getting way, way faster. What used to take years to play out, say back in the ICO days, can now happen in a matter of weeks. The speed of information has just compressed that whole timeline down. Okay, so if these cycles are moving at lightning speed, how in the world do we spot them before we get to stage 4 and end up being someone else's exit liquidity? It's all about finding the right signals in all that noise. Thankfully, the blockchain leaves footprints, and the 3 most reliable signals you can track are 1. Developer activity, because, real innovation has to actually be built. 2. Capital flows. Just follow the money. See where the big VCs are placing their bets. And 3. Social volume. Tracking the conversation to see if public interest is starting to build. And here is a pro tip for finding that perfect entry. The sweet spot, the best time to get in, is often when you see a divergence. The price is starting to climb, but social media is still quiet. That's your clue that the smart money is moving in before the big crowd shows up. That is your signal. All right, let's make this practical. Let's apply this whole framework to the market as it is right now. What are the big stories driving capital and attention in late 2025? Well, the data is pretty clear. The intersection of artificial intelligence and crypto, along with good old meme coins, has captured the lion's share of investor interest. We're talking over 62% of the attention. These are the narratives with the most energy, the most momentum behind them at this very moment.
And if we drill down a little, we see three themes that are really dominant. First, AI agents, this idea of software that just operates autonomously on chain. That's already a $25 billion sector. Second is restaking, a new way to secure multiple networks with the same capital. That's the narrative that drove Eigenlayer's value from 1 billion all the way to 18 billion. And finally, real-world assets, or RWAs. This is the big institutional play, and we've already got over $35 billion in tokenized assets living on chain.
Now, just identifying the story, that's only half the battle. You need a plan to actually act on it without getting totally burned. So, let's build a strategy. A really strong investment thesis needs three things. First, you've got to connect the story to the fundamentals. Does the on-chain data actually back up all the hype? Second, check the tokenomics. A great story can't save you if the token has terrible inflation. And third, and this is often the hardest part, you have to master your timing and your own psychology. And this is the hardest part because it means fighting your own instincts. The best time to get in is often in that confusion phase, when most people are still scratching their heads, trying to figure out what the narrative even is. And the time to get out? That's during euphoria, when everyone you know is absolutely certain it's a sure thing.
So how do you manage that risk? A really simple way to think about it is the 60-30-10 portfolio split. Keep 60% of your portfolio in the blue chips, your Bitcoin, your Ether. Allocate 30% to these narrative-driven plays we're talking about, and then that last 10%, that's for your high-risk moonshots, or maybe you just hold it as cash. This kind of structure makes sure that if one of your narrative bets fails, you survive to trade another day. And this might just be the most important rule of all. Before you ever buy a single token, you have to know your exit plan. This is your invalidation point. What data would prove your thesis wrong? Would it be developers leaving the project? Smart money wallets selling off? If you see those signs, the story might be over, and you have to have the discipline to get out, no matter how emotionally attached you become. So let's bring it all home. The core engine of this market is a simple chain reaction. Price follows the narrative, and the narrative follows attention. Your job as a trader or an investor isn't just to stare at charts all day. It's to be a storyteller, to understand the deep reasons why attention is flowing where it is. Because in the end, that's all this market really is. It's a huge collection of people all chasing, all searching for the next big story. By understanding how these stories form, how they evolve, and how they end, you can put yourself ahead of the crowd. So the question is, what story will you be watching?
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.